Choosing the right EFT for your core US equity exposure can make a massive difference. Today we're comparing VOO, SPY, and SPLG, three EFTs that track the S&P 500 but in very different ways. We'll look at performance, fees, dividends, liquidity, and which EFT might suit your investment style best. VOO. It is a Vanguard EFT that tracks the S&P 500 exposure to 500 large US companies. Its top sectors in technology, healthcare, financials, consumer discretionary. Top holdings are Apple, Microsoft, Amazon, Tesla, and Alphabet. Its performance is 1 year very close to S&P 500 performance. The 3-year mark has a strong and stable returns with low tracking error. The 5 years have excellent long-term compounding power. With fees and dividends, expense ratios are around 0.3%, which is extremely low, with dividend yield of around 1.3%, and it is paid quarterly. Investors profile: it is ideal for long-term buy and hold investors who want low cost and stability. Next, we have SPY. SPY is a SPDR S&P 500 EFT trust with the same index as VOO, but structure matters. Liquidity. It is extremely high, one of the most traded EFTs in the world. Its performance is almost identical to VOO because it tracks the same index. The fees and dividends, with expense ratio of around 0.09, which is higher than VOO, and dividend yield around 1.3%, which is paid quarterly. Its strengths: it is ideal for traders and active investors. Very tight bid and ask spreads. High volume makes it efficient for large transactions. Investor profile are best for those who prioritize liquidity and trading efficiency over cost. Next up we have SPLG. It is an SPDR portfolio S&P 500 EFT, but the lower cost option for SPDR. The index exposure, the same as S&P 500 exposure, but structured to be more cost efficient. Its performance is 1 year, very similar to VOO and SPY. The 3-year has good consistency and tracks the index closely. The 5-year has strong long-term performance with slightly lower cost drag than SPY. The fees and dividends. The expense ratio is around 0.03%, as low as VOO, and the dividend yield is around 1.3%, and it's paid quarterly. Essentially the same from the index. The investor profile: it's great for investors who want S&P 500 exposure with ultra-low cost and don't care much about the trading volume of SPY. Dividend strategy and reinvestment. VOO has a dividend yield of around 1.3%, paid quarterly. Dividends can be reinvested automatically, compounding growth over time. SPY has a dividend yield of also around 1.3, which is also paid quarterly. Very high liquidity allows investors to quickly reinvest dividends if desired. Frequent traders may prefer manual reinvestment to optimize timing. SPLG. The dividend yield is also 1.3% quarterly, and low-cost EFT makes dividends reinvestments highly efficient. Minimal expense drag. Key insights: reinvesting dividend is crucial for long-term growth. While all three EFTs have similar yields, VOO and SPLG minimize costs, so reinvestment generates slightly more compound over time. SPY's liquidity advantage help active traders reinvest efficiently, although costs are slightly higher. Historical performance and market context. Over long periods, VOO, SPY, and SPLG deliver very similar returns because they track the same index. During bull market, SPY and VOO may perform similarly. SPLG will nearly match both. During market correction, difference in cost-expense ratio becomes more meaningful, benefiting low-cost EFTs like VOO and SPLG. Trading consideration. SPY's high volume allows for precise entry and exit, good for tactical moves. Key insights: for long-term investors, differences in performance will likely come down to cost efficiency and dividend reinvestment, not index exposure. For final verdict, you choose VOO if you want a low-cost, scalable, long-term investment vehicle with strong institutional backing. You choose SPY if you want maximum liquidity, deep volume, and flexibility for frequent trading. You choose SPLG if you want the cheapest possible S&P 500 exposure in an EFT format and don't need SPY's liquidity. For many investors, VOO or SPLG could be interchangeable, but SPY is a specialized tool mostly for traders. Thank you for watching. If you found this breakdown helpful, hit like, subscribe, and save this video for future investing insights. See you in the next one.